Hi, this is Daniel with Unrivaled Investing. Today we are going to talk about TikTok, the explosive social media app. Is there an opportunity for investors to get involved? So why did it get my interest? First of all, TikTok has seen explosive growth in the last few years. I mean, you can see that most recently in the fourth quarter 2019, their revenue grew by over 300%. So they are growing way faster than Facebook, which is the dominant, social media platform. And TikTok is a forced seller. Ding, 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 ding. That should be ringing bells in your head like, hey, there's a potential opportunity here. But before digging into all that, if you're interested in finding potential companies that can go up hundreds or even thousands of percent, hit that subscribe button. And if you're interested in finding out what are those potential companies that I find interesting and I'm buying in any given month, go to unrivaledinvesting.com, click that journey button. If you have a question or any stocks that you want me to look at, hit that subscribe button, but also leave a note below this video. So what's the goal of this video? First of all, what's the history behind TikTok? What is it? Why is there an opportunity to buy TikTok? Who's bidding for TikTok and why? And is there an opportunity for investors to share in that upside? Let's dig in. TikTok history. First, there's a Chinese company called ByteDance that in 2017 spent $1 billion to purchase Musical.ly, a social media video platform where users create short video clips that are from 3 to 15 seconds intended to be viral content. Think a lip sync, dance, comedy, stunt, videos with soundtrack music clips that make it really easy. They're lowering the barrier to make really interesting potential viral content. Really short clips that are funny, that are catches your attention, and you just constantly scroll through it. The reason why ByteDance bought Musical.ly was because it gave them a foothold into the US market. ByteDance already owned TikTok, which was a very popular app in China, and merged the two, TikTok plus Musical.ly, in 2018. But why are companies looking to buy TikTok? TikTok is a forced seller. On August 6th, 2020, President Trump signed an executive order banning transactions with TikTok within 45 days and gave them 90 days to divest its American assets. It's hard to generate revenue when your counterparties are forced not to do business with you. So any sort of ad agency, any advertising revenue, gone if the president of the United States is saying, hey, these companies cannot transact with you. But why? So the first consideration is foreign influence. President Trump is worried about the potential influence of a very popular social app. It's downloaded over 175 million times in the US alone, being owned by a Chinese company and subject to the Chinese Communist Party. And there's a lot of potential risk here. For example, here's an article from The Guardian where TikTok, the popular Chinese-owned social network, instructs its moderators to censor videos that mention Tiananmen Square, Tibetan independence, or the banned religious group Falun Gong, according to leaked documents. So if you have this app that's dominant or starts growing really quickly in the US, is it possible that the Chinese Communist Party, which definitely oversees ByteDance, can say, hey, you know what, we want you to start removing any videos that favor this presidential candidate, and we wanted to show only videos that mention favorably this presidential candidate. That could be huge. This is just one possible case. So to have foreign interference is a legitimate risk. When you think about the Chinese Communist Party owning overseeing a company that owns an asset that has gone viral in the United States. And keep in mind, this company might be, getting all sorts of user data that they're acquiring and storing it in their database to build profiles of who's using this. But let's keep going. So TikTok is a forced seller. For number two, reciprocity. Major US tech companies like Facebook and Google not only aren't allowed to operate in China, but have been hacked when they were. Google, which for a brief period operated in China, was hacked by the Chinese government while they were in China. And the Chinese hackers who breached Google servers several years ago gained access to a sensitive database with years worth of information about US surveillance targets, according to current and former government officials. I mean, this is a huge freaking deal. Why should the Chinese government have Chinese assets, or why should Chinese companies be allowed to have the upside of Western countries when Western countries aren't allowed to have the upside of tapping into the Chinese market. So purely from a reciprocity perspective, yeah, TikTok and its Western assets, its Western markets or its operations should be sold just from a fairness perspective. But why would anyone want to buy TikTok? TikTok owner ByteDance reportedly made a profit of $3 billion on $17 billion of revenue last year. Its revenue grew from 7.4 billion to 17 billion from 2018 to 2019. So this is consolidated ByteDance operations. So clearly, like, that this is not just their US operations, but it is growing extremely quickly, and it's also extremely profitable. People know, just look at Facebook and the social network movies. Like, these platforms can be immensely lucrative. Facebook can have an operating margin of 40%. So this is, if you get into this space and you succeed, you can be extremely profitable. And they're saying ByteDance private valuation is reportedly between 110 billion up to 180 billion dollars. That's incredible for what they've been able to do. So who are some of the potential buyers? Right now there's rumors about Microsoft, Walmart getting into the game, Oracle, and it's for 20 to 30 billion dollar valuation, just the Western assets of TikTok, thinking about, United States, Canada. What's the opportunity? Is there an opportunity for investors to partner with Microsoft and Oracle, Microsoft and Walmart bidding on it versus Oracle? And, so from the Microsoft Walmart angle, why are they getting into it? Microsoft firsthand knows how profitable running a social platform can be. They acquired LinkedIn a little while ago, and just look how fast it's been growing. Since 2017, LinkedIn did 2 billion in revenue in 2017, did over 8 billion in revenue in 2020, which is incredible. In the last 2 years alone, LinkedIn revenue grew over 50%. LinkedIn, which was acquired for 26 billion in June 2016, assuming a 30% net profit margin. I'm ballpark figure. Just I'm playing around with figures, hypotheticals here. On that 8 billion in revenue, they paid 10 times 2020 profits, which is incredible. Like that. Look at that. Those smiles in this picture. You see Jeff Weiner and Reid Hoffman both had significant payouts with the LinkedIn acquisition, and they've got these big smiles on their face. And Satya Nadella, he's got this like little smile. The guy who should be really smiling in this picture is Satya Nadella, the CEO of Microsoft. I mean, great freaking acquisition, like 10 times profits. If that were to be divested or sold right now, you'd probably get 20, 30, maybe 40 times, profit. So it'd be multi-bagger from here. It's just, the real guy that should be smiling is Satya Nadella. Walmart will help Microsoft because 20 to 30 billion dollar acquisition is pretty sizable. So Walmart will help Microsoft with this acquisition, share the cost. But why are they even getting in? And keep in mind, this is all sort of speculative right now. There are multiple bids for TikTok. Why are they even getting in? And the answer is social e-commerce is an obvious trend. You see Facebook with Instagram trying to roll out, like, hey, you can buy directly while you're browsing, flipping through Instagram, or you start having this favorable ecosystem where influencers, you can buy like straight from them. So then the influencers become incentivized to sell their goods through Instagram, and it creates this like, hey, they only want to be on Instagram because that's the place where the shoppers go. The shoppers only go because that's where the influencers are. So there's a lot of potential here for social e-commerce, and you see that in China with a company called Pinduoduo, which is a company that I personally have a stake in, where it's worth over $100 billion, and they're revolutionized social commerce because the way they work is that you need to like refer enough of these deals online, and if you get enough of your friends to buy something, then you all share in on this discount. And it's been a revolutionary model. It's growing very quickly, $100 billion market cap. This is clearly a trend. Walmart, which is still largely an offline business, is trying to say, hey, how do I get involved with this? I see Amazon is crushing it. Shopify, which is enabling a lot of stores, is crushing it. How do we get a share? Does Walmart have any history of acquiring digital assets? Unfortunately for Walmart shareholders, they sure do. They acquired Jet several years ago, a $3.3 billion acquisition, which they just wound down after a couple of years, 4 years. Here recent headlines how they're divesting some more online brands like shoes.com, Bare Necessities, ModCloth, and Indie Apparel brand. So they have a history of not only buying e-commerce assets, but clearly bungling it and walking away from it like, hey, this just isn't working. So you see Walmart, Microsoft, you see the interest there. Why Oracle? First of all, Larry Ellison is wicked smart. He built one of the first key businesses that the database business. This is huge. He owned it. He dominated it. Up until the recent, the cloud developments where he's sort of been left in the dust. But he clearly knows about the opportunities and potential profits of owning a social network. So he sees the opportunity. But why else would Larry Ellison, which, in all honesty, TikTok has nothing to do with Oracle's, businesses. Why would he look to get into TikTok? And the honest answer, in my opinion, is hubris. There have been several times where he likes to say like these other businesses are garbage. Like he said, look, founder Larry Ellison calls Uber almost worthless because it doesn't own cars or control its drivers and has an app that my cat could have written. That's what he said. He likes to use the cat analogy because he's been using it for decades. Where previously he was talking about Marc Andreessen, who wrote Mosaic, one of the first web browsers, and talked about Microsoft's Netscape browser. And to emphasize his point, that he wasn't actually interested in buying those assets, which at one time he was considering buying a browser. To emphasize his point, he said, I said my cat, the one that recently died, could write a browser. For some reason, that made Jim Barksdale, Netscape CEO, and Marc Andreessen, the Mosaic writer, very angry at me. I don't know why. She was a very smart cat. The two cats I have left, incidentally, can't program worth a damn. So I think there's a little bit of hubris with Larry Ellison. Honestly, it's been earned with his wallet, you know, being filled with billions of dollars. But honestly, I don't think running a social media platform is actually that easy. Just look at Twitter. Twitter is only a $30 billion market cap company right now. And here, this story just blows my mind. They acquired Vine for like $30 million back in 2012. Do you know what Vine is? Vine makes short videos, very short clips that are intended to be viral videos, and they shut it down because they didn't get the traction or they didn't have the operations for it. So it's like, clearly, if you don't know what you're doing, and maybe Jack Dorsey should stick to Square versus Twitter. Given that TikTok's U.S. sales, U.S. assets might be acquired for 20 to 30 billion, which is worth more than Twitter, which is worth about the same as Twitter right now. I mean, this is incredible. Like, if Twitter had gotten this right with Vine, this Twitter could be worth multiples of their current size. So, anywho, is there an opportunity for investors to get in on the potential TikTok sale? To which I say, hold the line, hold the door. Poor Hodor. Those are for those folks that know Hodor. That he held the door. So I say hold back. Don't let animal spirits or speculative juices get in the way, because you certainly are seeing it already, where the rumors that Walmart was getting in the bid caused Walmart stock to jump nearly 5% in a day. Hold the door, hold the line, wait until it settles, and then you have a good idea of whether or not there's actually a bargain, whether or not there's an opportunity to invest in something. I say hold on. If you're interested in seeing what I am buying or selling in any given month, go to unrivaledinvesting.com. And if you like this video, please hit that thumbs up or subscribe. Thanks.